Welcome, dear traders. Tomorrow, on October 21, the Federal Reserve is entering the silent period. That's why yesterday's speech by Fed Chairman Jerome Powell made a strong impact on the market sentiment. As a result, the benchmark stock indexes closed the New York session lower, and the financial sector, commodity sector, and the sector of consumer goods logged the worst losses. In essence, the keynote speech by the central bank's chair brought disappointment to most market participants. Several Fed policymakers who spoke previously shared the viewpoint that the high yields of US Treasuries already served as a restraint for monetary policy. Recently, Treasury yields jumped to multi-year peaks. In this context, investors hoped that the Fed chairman would soften his stance on the agenda for interest rates. However, the actual content defied expectations. Jerome Powell said that inflation has not been defeated yet. The strong domestic economy and the labor market could require tighter monetary policy setting to tame stubborn inflation. Besides, a range of uncertainties, both old and new, complicate our task of balancing the risk of tightening monetary policy too much against the risk of tightening too little, he stated. At the time of the doom and gloom, stock investors prefer to play safe. So, stock markets are watching the outlook of assets. The real estate sector, sensitive to interest rates, incurred heavy losses yesterday. Real estate stocks dropped by 2.4%, dragging down the broad-profile stock index. As a result, the S&P 500 fell by 0.85%. Futures on the index shed another 0.19% in the New York pre-market on Friday, and the index entered a correction stage, trading in a narrow range between 4,277 and 4,257 points. The overall sentiment across financial markets today is risk aversion. Alarming geopolitical news is also to blame for the risk-off mood. In turn, the VIX index that measures anxiety in financial markets topped the level of 21 points on a Friday. This season of corporate reports is going on in the United States, and they also matter a lot to sentiment on Wall Street. Yesterday, after the closing bell, two iconic American companies presented reports which confounded Wall Street forecasts. Tesla reported weaker than expected corporate earnings. In contrast, Netflix shares surged by 16.1%. The thing is that the world's largest streaming company in terms of subscribers added 9 million users in the third quarter. So, Netflix announced an increase in tariffs for some of its projects in the United States, the UK, and France. Meanwhile, the US dollar is a win in favor with the forex traders. The hawkish comments by the Fed's chairman are one of the factors to strengthen the greenback. The US dollar is benefiting from its status of a safe haven asset, as well as the healthy domestic economy. For this reason, the US dollar index has settled above 106 points, and today the US currency looks overbought. Hence, it opened New York trade with a downward bias in the corridor between 106.10 and 106.40. And curiously, today the US dollar receives less support from upbeat US economic data and an advantage of high interest rates over other currencies from the basket. Yields of US Treasuries supporting the greenback also inched down. However, the long-term prospects of elevated interest rates encourage the US dollar's strength. Like other commodity currencies, the Canadian dollar may gain ground on the back of rising oil prices. On the other hand, continuous and cautious market sentiment could put a lid on the loonish advance against its American rival. For the time being, the USD cut overbought pair has been sliding steeply, having parted from the intraday high of 1.3730, and the Canadian dollar weakened to 1.3760, and this level is in proximity to 1.3750, the 6 months low reached on October 4. The crypto market is celebrating today. The US Securities and Exchange Commission has withdrawn from the Ripple lawsuit. At the same time, all charges against the management of Ripple Labs were dropped. The crypto community declared this decision a capitulation of the regulator and celebrated the victory by increasing the prices of most digital coins. The flagship crypto briefly touched the landmark level of 30,000. Amid the retreat of the exchange regulator, investors now cling to the hope that applications for opening Bitcoin spot ETFs will soon be approved. However, after the initial excitement had passed, Bitcoin declined again. The fact is that, upon reflection, this step by the regulator may not be a capitulation, but just a tactical retreat. It allows the Commission to appeal the parts of the case lost earlier and also hide its involvement in the selling Ripple to institutional clients. Therefore, at the time of preparing material for this video, Bitcoin was already trading at $29,600, trying to maintain growth. To sum up, market participants began the North American session today with a mixed sentiment. Our video reviews are over, and we wish you gainful trading and a nice weekend. Feel free to leave your comments and ask any questions. So see you online tomorrow.